This is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, May 18th, 2021. I'll start out with a very brief update in the broad markets, and much briefer than the recent ones because not a whole lot's happened. Nothing's changed on the daily time frame. We're still below the primary trend lines on all the major stock indexes, and on the 60-minute charts, give you an update this morning. There's not a lot to report since then. This is the most recent bounce target zone that was laid out once we broke below it. That was that gap support right there, and we hit it the other day. We hit it the other day, and we hit it again today. So so far, again, it provides objective shorting ops each and every time we hit that level. My primary scenario, or no guarantees, but I still believe that we'll likely break down. I have another leg down, likely that this is a correction and this is a counter trend rally within that correction with another leg down to come. And as mentioned this morning, and I believe on yesterday's video, we also have an objective level. Again, and I have to say this, it depends on where anybody, if you were to short or if you are long, where are you concerned about, what kind of levels. For example, if you're long, you want to go long on a breakout. There's a downtrend line there that may come into play. When I say may come into play, it's only a few reactions so far. So if we hit it in reverse, that would be another reaction. And there's also some horizontal price resistance there around 330. So that's the level that I laid out this morning. Again, if someone were to just take their first short here, or if their average cost is somewhere around there, I think that's objective to have a stop somewhat above there. And then targets I've laid out in the past, and I'll continue to update, especially if we start to roll down. And then the big level to watch is a break of the recent lows, which is around, give or take, about 316 right there. A move down there, if it happens soon, would be another rejection off the bounce target zone, which is a resistance zone. Remember, that's former gap support. Once a gap support, then it becomes gap resistance. And so if we get rejected there, then a break of the 316 level will most likely open the door. And again, if I think, and I thought we'd be here at this point, we're not yet, but I think if we get down to that level, get anywhere close there, especially if we break it, we'll probably get into that impulsive type of sell-off, that what I call point of recognition, where the dip buyers realize buying the dip isn't working. Right now, it's really anybody's game, bulls or bears. By that I mean it's only been a drop of about less than 8%, 6.67 it's showing me there on the way I measured it. And the standard definition for a correction is a drop of 10% or more, so we're not even to that yet. But again, based on everything I've covered, I think we'll get there. All right, promised you a quick update. That's that. Let's not make any more of it. If and when we move above the top of the bounce target zone, there's that downtrend line 330. There's other levels too. It's not completely over, but it does chip away at the bearish case. Back test of that trend line, certainly a possibility. There's that key 334 level. So again, there are plenty of resistance levels overhead. These are the ones that I'm preferring. Believe based on the technicals that we'll cap this counter trend bounce, or I should say plural, these counter trend bounces, counter trend rallies so far, the three of them. All right, next up, S&P 500. SPY continues to hang in there because of the sectors holding up, but we're back to that bounce target zone. That bounce target zone was first laid out here. We bounced up, hit it, got rejected, then we hit it again. We hit the bottom of it here, right there. Here, I'll zoom in for you. Hit the bottom of it there. Close to the top, about midway up there, and we're at the bottom of it again. So just like QQQ, these are any bounce into this range, this shaded area, I view as an objective shorting op. If we get above there, would I continue to short? No. It doesn't mean we can't go down. Like I just talked about, QQQ has resistance, and that's kind of put the brakes on the S&P 500. So although the S&P 500 has been resilient and it's held up better, as I mentioned yesterday or so, we're trading where we were 1 month ago on the S&P 500 at the same level from a month ago. So we've gone nowhere because tech has been holding down the market, while other sectors such as technology. Here's healthcare. I redid a few of these trend lines. I just want to show you real quick. I've slightly modified a few of the trend lines for a better fit. XLV, this is the second largest sector in the S&P 500. or at least it was the last time I checked. So we're right on trend. So again, it doesn't take much. A break below the recent lows in most sectors, as well as the markets, should do the trick and open the door to a pretty impulsive drop down if we get that. So if nothing else, those are your levels you want to watch. Last week's lows. There's XLV, and of course that would also take it below the trend line. XLF, as I've mentioned, financials is a big one here. Big component of the S&P 500, and you really don't have representation of the financials in the Nasdaq 100, so that's why it's holding the S&P 500 up, because it's been one of the strongest sectors, and that's why QQQ is down quite a bit more. But there it is. We hit it last week. Successful defense, pretty well-defined trend line. What I mean by that? Well, we have the lows back here in October, reaction low there, several reaction lows here, another one there. That helps to validate it. So if we can break that level, at bare minimum, it should bring us down to 35, 33 or so. That's a pretty nice support level. And if that gets taken out, so forth and so on. You can see the levels marked on my chart. So that's what we need to see. XLC, I added this trend line here. I had the primary trend line that goes all the way back to the previous lows, back to the left of the chart here. I'll just tell you when that is. That was the March lows of 2000. And then I've added recently this other secondary trend line right here in yellow. I just overlaid it with blue, of course. But there, we have reactions along the way there. Quite a few, and we've been dancing on it, as well as that yellow line. If you can make that out, the 50-day moving average, that has also come into play at each of these pullbacks. So again, this is a common theme, just a lot of key support levels on many of the sectors, and you get the majority of the sectors in the S&P 500 breaking down, or at least several of the top weighted ones. See, I'm not spending my time on utilities and basic materials. Basic materials have been strong, rightfully so. I've been bullish on commodities. These should be going up, and they have, but it doesn't move the needle on the S&P 500 because it's only less than a 2.5% weighting. So where you go back to the healthcare, almost a 16% weighting, and then technology about a 25% weighting. That's why I put a higher emphasis or focus on those. And here's another line we kind of had. I just pulled up tech and just kind of eyeballing it. I can see a trend line like that right there, potential support level. Okay, moving on. That is the markets. Now let's talk trade ideas. Since the market, at least the broad market, as I just stated, has been going sideways for a month. It's been hard to make any big money on trading the indexes. We've done pretty good on the Nasdaq 100, almost 8% drop there, but again, going nowhere here in the broad market. So where do we make money? Whether we have a correction or not, whether we have a rally or not, individual stocks, good old-fashioned individual stock picking. So let me just do an update on some of the recently highlighted trade ideas. Starting out here, Ethereum. This is a ETF-like instrument, Grayscale Ethereum Classic Trust. ETCG is a symbol. If you can make it back there, it's right here. ETCG. That one I've mentioned several times. In fact, first is alongside breakout, bullish above, a break above 2244, or was it back here? Either way, it's at least this level there, and we ripped up, had a better than 100% double on that one from where it went. That was to the highs about 323%. And then more recently, I've been highlighting the uptrend line, and so far, pullbacks, they don't look like a lot here because it's scaling. This is a log scaling chart. These are huge moves on these pullbacks to support. And so far, it continues to hold support. So it's simple. Buy support with stop somewhat below if you're bullish. You can wait to short it if you get a solid break. That's always a possibility there. But as of now, I've been highlighting this as a long side setup, and up again another 12% today. And just to kind of put it in perspective, if you turn off the log scaling, let me show you that. I got to go down here and turn off logs. So these are the candles right here, and you can see how big they are recently, the bounces. That's what happens when you turn off log scaling. A security like this that's moved so much, you have to use log scaling, in my opinion, to render an accurate picture on the chart. All right, next up would be, again, no particular order. I'm just starting with the longs that I'm highlighting today. This one hasn't gone anywhere yet. It was highlighted back here, well, a little bit. It had a downtrend line. Let me zoom all the way out so you can see where it comes from. Again, I do this because some of you might just be coming in here and catching up for the first time in a while. There's our primary downtrend line. It was taken out. A little bit of an impulsive rally recently, but as I mentioned, 1055 seems to be pretty significant resistance right there. There was a little pop above there that failed. So far we had a brief pop. We're right on that level. It needs to just start putting this level in the rearview mirror. So I think if it gets up here, gets away from there, it has the potential to run, but it is a very high risk. In my opinion, it's a very thinly traded stock. Speculative or aggressive is the right term for it. Pass if it's not your cup of tea. I just wanted to mention that it's still a potential play. It broke out, and I mentioned it the other day, but I also said the day it broke out, look, I wanted to see more volume. I wasn't crazy about the volume, and that breakout didn't stick. So we need to see this one start rising on volume, and it has potential. Otherwise, if you're in it and you took it, maybe a stop below the recent lows right there would limit any losses if you took it on the pop last week or the week before last above the 1055 level. SB, that one was first mentioned as a long trade idea, I believe, on the pullback here in one of the long trade idea videos to 214, if I'm not mistaken, where it was. But we've come full circle. We hit that 393 uppermost target and its resistance. We have negative divergence. I wanted to point that out. We have a minor trend line right here. If I want to give it a benefit of the doubt, I can draw it like this, right under these recent lows. There you can see the trend line right there. And what it is, it's resistance from back here a couple years ago in 2018, and we're at that level now. Not one of my favorites because the trend right now, and this one's pretty strong, but it's worth passing along, or I wouldn't mention it. If you break down much below you want to see at this point the recent lows right there, about 375. It should come back into about $3, and that would be a nice, quick 20% or so drop. If you could get it there, and like anything else, just use a stop in line with your price target. If you're targeting a 20% pullback, you can easily give yourself a 5% stop, and that's a really nice 4-to-1 risk reward ratio. That's SB Safe Bulkers. VLDR, mentioned this one quite a bit recently, and here's where we're at. We had a really nice support level right here at about $11 that we hit recently, a couple times. 1, 2, rallied up, then we just broke it. We broke it, but we're whipping back. So that was a breakdown in itself. That's bearish. However, we're back to it, and we put in a big divergent low. PPO is starting to curl up here. Any more upside, it'll be confirmed. So what I'm looking at, if this one can regain $11, especially with conviction, a solid close above there, I think it has the potential to run and maybe make it up there to that 1729 or even 2068 target I gave you before. Also in a very aggressive trade. This one moves a lot, up and down in percentage terms, so keep your position size small if you take it. Home Depot. Home Depot was actually in one of the long trade idea videos, it was in March, early March. I mentioned a handful of blue chip stocks that had pulled back to support and providing objective long entries. This was one of them right there. We hit that, it was actually this first candle. Hit that 247 level, and it ripped from there. Home Depot and this is a big, large cap company, and this thing rallied from that point 40%. But we've come full circle now, so at this point in time I'm highlighting as a short setup. Why a setup? It's not an actionable trade. Here's our divergent high, that's negative divergence. Here's our uptrend line, so this forms a bearish rising wedge pattern. We broke down recently, and I may have mentioned the divergent high, and I also may have mentioned this one with the doji up there as a pullback trade, pullback to 318, 319 support recently. But we broke down another impulsive move. We've been consolidating, and that 319-ish area, we're a little bit below it now. We're at 316.61 as I do the video, but this line below the recent lows, right about 315, should do the trick. I think if we can take out the recent lows, Home Depot might come back in here to 292, especially if the broad market corrects. Let me just say that again. Especially if the broad market corrects, that's what you want to see to get a check mark on this one, because it is a top component, a big component of the S&P 500. So there's Home Depot. And why that target? Because this was a trading range recently back here, multi-month trading range. Easy stuff when you recognize these trading ranges. Wash, rinse, repeat. Long at the bottom, and sell at the top or go short at the top to swing back to the bottom until you eventually break out. This one broke down, fell to the 247 support. That's actually where we caught it that time, and then went up and blasted on through there and kept going. All right, so there's a potential setup. Plug I mentioned is a long trade, and it broke out, and then it proved to be a whipsaw. It didn't really, well, what did it? Broke out of the downtrend line, but not impulsively. I mentioned that at the time, and it also failed to trigger a buy signal. I wanted to see it break that 30.09 level right there, which it never did. So this one never really gave us a buy, but what it did from there, it continued lower, put in a divergent low. I don't know where the lines went. I thought I had them here. There's positive divergence right there. Oversold on the RSI. No divergence, but oversold. Divergence on the PPO right there. Here you can see if I make it much bigger. See that divergence. Sometimes when you have such a huge swing in a stock, the PPO really moves a lot, and the MACD is even worse. That's why I like to use the PPO. But you can pick up the divergence, like I showed you by zooming in there. And then it's been moving steadily higher since. So we put in the divergent low, and see this big green candle? This is what we call a bullish engulfing candlestick. When you have the body, a big green candle, it engulfs the body of the previous candle or candles. In this case, we engulfed the previous three candles. That is a potential bottoming stick. And what you want to see afterwards is follow through to the upside, and that's what we had. We consolidated a couple days after the big move, and we've been moving up steadily since. My targets, well, that was the breakout point before, but now that would be the next target, about $30, we'll call it. Then 37.50, and then about 48.60. So, yeah, will it help if the stock market starts to move higher from here and goes on to make new highs and doesn't have a correction at this point? It will certainly help, but I don't even know if this one's a top component of any of the major indexes. Maybe the mid caps or small caps. I don't think it. I'd have to look into it. I don't think this is a large cap or mega cap stock, so I don't think it's in the S&P 500. And then even if it is in the, let's say, the Russell 2000, the Russell 2000 is very balanced out. You don't have top heavy weightings like you do in the NASDAQ 100 and S&P 500. They're much more evenly distributed, the weightings. So you can be a component of the Russell 2000 and completely go the other way of the index and not be as, if the stock not be as subject to forced selling or forced buying when the index is going up or down. A couple more. RKDA, I've mentioned this one, covered this one for years, traded in, out, long, short, mostly long, and mentioned it most recently here in the last couple weeks as still an objective long entry on this pullback to that 238 level. It's a really nice support level. Give it a little bit of room because this thing's volatile, but targets are, any of these levels, minimum target 344. Just from where we picked it up last time, if you bought it, we've had a couple pullbacks since I mentioned it recently to 238. And if you bought it there and you hit that 344 target, you're good for about a 45% gain. So you can take the money and run there, or you can just raise stops and let it run and see if it can do one of these big spikes that it's done in the past. But I'm more apt to, at this point in time, take profits there. I'm going to get to, well, let me do it now. I'm going to just one more long, and then I'll show you the commodities sector ETF that I talked about the other day. DM, I also mentioned DM recently as a trade idea. Talked about these levels, including 1049 right there, 1254. This one recently put in a divergent low, back tested. Told you this one reported on Monday. Back tested, and it's been moving steadily higher since, and it also put in divergence on both indicators. So a reversal off support, also another bullish engulfing candle. There you go, right there. Boom, and moving steadily higher since, and I'll still maintain these targets 1566 and 2141 unofficial targets, meaning you sell a little bit below the actual level that you plan to take profits on, although we do have now a reaction high there that might come into play, so we could add that as a potential target or call this a target zone. Sometimes we'll do that, about 1942 up to 1566. Okay, and then on commodities, remember the other day I mentioned, I've been very bullish on commodities for a while, and that's where a lot of my long-term funds have been invested, and still believe that commodity trade is, in the early stages of a new bull market. I don't think this is transitory inflation like Powell thinks. I think it's here to stay inflation. And again, that's not just based on gut feel. It's based on what the charts are telling me, the technicals. But within any bull run, there's going to be corrections. So I highlighted DJP, and this is just one of several. I picked this one because it's a very well diversified commodity ETF. It has a lot of different commodities in there, and so it's representative of the commodities market as a whole. Although please note that they are, that gold has nothing to do with corn, and live cattle has nothing to do with natural gas. So commodities, aren't a one. Some can be rallying at the same time others are falling. But overall, it's been a bull run in all commodities for the last year or so, and like I said in the recent video, you get these pullbacks, you go to the top of the channel, especially when you break trend, you tend to go to the bottom of the channel. And break trend, you go to the bottom of the channel. We recently broke trend, so for the time being, you might not want to be aggressively buying pullbacks on commodities. That's the bottom line. Whether you want to short them, that's up to you. I'm more of a I'm not crazy about shorting commodities, and the trend has been so strong lately. The pullbacks are just getting bought up, but again, select commodities I'll highlight if I see any opportunities. I just wanted to mention that, and that speaks as well to RKDA. Where was I going with that? I know I run on tangents sometimes, but this is an ag input stock. I've been bullish on that sector, and a lot of those ag input, all the other ones, just about all the other ones I mentioned besides that one. Here's some of the ones over the last year or so that I mentioned as bullish trades. NTR, CTVA, you can see these charts, just huge gains. These are big 100% plus gains. Mosaic, look at that. And there's an example too. Mosaic, fertilizer stock walking up right on the trend line. This is another potential short trade now. It was a long setup here. I can't remember where. I guess I had it color coded here. Maybe that was a breakout level. Maybe 15. I covered this one. I've covered these stocks many times over the past couple of years, so different points. But either way, from 15, it's more than doubled up to 37, and it's that big resistance. So that was the uppermost target I've had on this chart. There was a major reaction highs from 2018 back here, and so you're at resistance. You could even take a shot at this one now and then add to it on a break of the trend line. And again, so I'm looking at pullback trades here. These guys are in a bull market or bull trend, but I think if we pull back to 28.85 from where we're at now, around that 37-ish level, and I'm going to have to do this. If I grab that, it's going to move the line. So I'm going to grab a little bit above and then stop a little bit above the 28.85 level. And that's just to gauge the pullback. It would be about a 20% or so pullback on the Mosaic. So consider that a trade idea as well. And then again, I'm just trying to point out how a lot of these guys have already run, and birds of a feather flock together. So when the sector corrects, there's another example. CF is one I've highlighted. That was back then my maximum upside target, big resistance. Look at all these reactions in the recent years, and we're at that again. Can't draw a perfect trend line, but what I can give you is a nice divergence. So I actually ended up going off on a tangent on this one. I didn't plan to cover each and every one of these. I just want to point out RKDA still at support, and maybe wants to play a game of catch-up. The rest of the sector, at this point in time, I'm becoming bearish on their trend. There's absolutely no signs of reversal yet, but they're at big resistance. So I'll either I would either short a breakdown of support or a bearish chart pattern, or I short an overbought run into resistance if I suspect that resistance level will cap the rally and cause a pullback. And that's what I'm seeing on so many of these. So let me go through the rest of these, and then I'll get back to you and highlight some of my favorites. I just wanted to point out there that's what some of those look like. All right, now on to I kind of segued into short trade ideas, didn't I? I ended up with RKDA as a long. And want to go into the shorts now. Starting with bankrupt Hertz. Popped the other day. The Reddit crowd's in love with this one, think it's going to the moon like everything else. And it ran into big resistance about 640, 650 right there. You can see these previous reaction lows from in the past. And this one I think comes back to the trend line still. and or that 350 level up to, there's another line there, some reaction, so we'll call about 350 to $4, somewhere in that range, and that's still plenty of downside left on that one, about 38-39%. A related note, let me see, I don't think I have this on my watch list, is AMC. The Reddit group also is in love with AMC, have been for a while, and AMC rallied into big resistance. I noticed the other day about 1432 right there was these reaction highs back here. You can see that's where several advances were capped at around that level then, and for the last 4 days now, zoom in nice and tight. 1, 2, 3, 4. We've stopped around that level. There's been a couple spikes through it. This is a volatile stock, high short interest. Again, loved by the Reddit group. They think it's going to the moon, but I think it's an objective short here with a stop. You got to be a little bit liberal on your stops for a swing back down to about $12 and quite possibly more, maybe all the way back down to that $9 level. So, you pick your price target. If this kind of aggressive trade is your cup of tea, if it's not, stay away from it. And then based on your price target, set your stop using an attractive risk reward, maybe 3 to 1 or better, and let it go. Bitcoin remained bearish on, and have been since we broke down here. And we also had then following that a longer term breakdown on Bitcoin futures on a long-term uptrend line on the daily charts. GBTC hit my first target here, hit it again. The bottom, that's a target zone back there, and then recently broke below it. That was that 39.25, giving us the next sell signal, and it continues lower, and I still think coming down to at least my second target here of 28.16ish, and that would be from the breakdown point, because we're in no man's land now. Like I said, I don't like to go long or short a stock in no man's land. That means smack between support and resistance. But if you took the breakdown, it's about a 27% drop to that next target. And if you took the breakdown of the trend line up here, and if we get down to T2, then you're good for about a 50% drop on Bitcoin short. And if it gets really ugly, maybe back to 17. Next up, Tesla. I talk about Tesla all the time. Still below trend, still flirting with the 200-day moving averages. So Tesla, to continue lower, is going to need to take out, like the market, the recent lows, and that should take us down to my next target, about 464, 465 there. Let's see. Seed was mentioned as a short in here, but it was in no man's land. I wanted it to get up closer, and it did. It bounced closer to that 1750 resistance, and we've pulled back now to a pretty decent support. This is another ag input stock, but this one could bounce here off that 1081 support because we just put in a divergent low there. Actually RSI divergence as well, and we have a nice little trend line. So that's a bullish falling wedge pattern. Maybe we go a little lower. If you can get it close to 1080, good, but we came close enough, so we could pop. So bottom line, objective long entries come on either a breakout above the downtrend line, the wedge pattern. Here, let me add that line permanently so I have it on my chart, or another pullback to 1080 or a little bit above that. Swing target 1750, but keep an eye on the ag inputs sector, because again, birds of a feather flock together. I doubt you're going to see, it's possible, but I doubt you'll see a 43% rally if the sector corrects, and there were quite a few, as I showed you, that were at resistance. And this one kind of already had a good healthy correction. That's why I'm highlighting it as a potential long. It's already dropped about 62% since it put in this big divergent high at resistance back here a couple months ago. Okay, just a few more and we'll wrap the video up. Follow up of trade ideas or setups that I've highlighted recently. Movado. Movado has this trend line that I think will come visit soon. We recently put in a divergent high. It's been dancing around resistance. We had, I'm zooming back out to show you that resistance comes all the way back here from in years past. And so we're just a hair above it, but with divergences, and this one's kind of stalled out recently. I think the magic number will be a break of about $29 and then the trend line, and that should send it back to at least $25.77 at minimum. WGO, Winnebago, been highlighting that one recently. Uptrend line right there. Potential head and shoulders reversal pattern with two right shoulders and a neckline like that. Either way, it's starting to crack now. That's 73.60. That's the line I wanted to see go, the level I should say. And there's a sell signal. We're at 71.51. That's a pretty big red candle. So that one does provide an objective short down to that first and minimum target of 66.58. Remember, that's an unadjusted level, meaning you want to cover a little bit above that if that's your preferred target. Otherwise, the next target down here, target zone's about 60.88 to 58.72 or so. SIG, Signet Jewelers, there's your uptrend line, getting close. Divergence has been building, and minimum target, well, the objective short entry comes on a break of the trend line, and then this is the first target zone. Second target down here, 41, and we'll just leave it at that for a while. That's a setup, not an actionable trade, because we need to get that sell signal going. SOX, semiconductor ETF. I added this line. I just wanted to point out there's some support here about 388. That's where we hit the other day, and I noticed that's where we bounced a couple other times in the past. We had a reaction high from right there. So to open the door to the next drop to my next target at 366, I think we need to take out 388.20, and that should do the trick. Marathon Holdings, Marathon Digital Holdings, still calling it back to this trend line in the 1040-ish level right there. This is a kickback to the 2437 resistance level, therefore an objective short entry. Would also be an objective short entry if we bounce back a little higher to the 29-ish resistance level and that downtrend line right there. So still plenty of downside. My next target remains 1615, and then the trend line, uptrend line, and or 1040-ish level, whichever gets hit first. And a quick update on Tupperware. Tupperware broke the primary uptrend line back here, and since then set up in a trading range right there, defined by these two lines. Broke that trading range and started another one. Simple stuff. Talked about this one quite a bit recently. Wash, rinse, repeat. Go long at the bottom, sell your longs, and or go short at the top. And we already had one pullback up to that level there, and actually another objective long entry at the bottom. We're at the top of the zone now. Time to sell longs. Or if you think we're going a lot higher, because sooner or later you break out. These trading ranges don't last forever. So if you're a bull, it's simple. Just set your stops so you don't go back to the bottom of the channel and hold for a breakout. If you're a bear or you're just an active, flexible trader and you recognize a pattern and want to milk it as long as it continues, then you short here right at resistance, the top of the resistance zone or the trading zone, trading range, I should say. It's that easy. And you set your stops somewhat above. There's a gap right there. That might be an objective level. And this gap, when we gap down into the zone right here, and let it ride to at least that 23 level, and or trail your stops down as it approaches 23, tighten up your stops and hold out for a breakout, a potential breakout, breakdown of the range, and that should open the door to that next target about 1960 or so. And again, Peloton, done a few updates here, gave us a breakdown right there, objective short entry on a break above 98.68 support, moved about halfway down to my first target of 72, and has provided an objective short entry for the last several days, including today, another back test of the resistance level from below, and with a stop somewhat above. My somewhat would be above that 104.42-ish, so call it 102.50 level, and that 50-day moving average stop somewhere in there for a swing down to 72, and that's PTON Peloton. All right, and that does it. We'll just wrap it up here, get the video out to you guys, and again, broad market's kind of grinding around, so if you're only trading that, you have to have patience. And if you're trading other things, I like to trade long, short, mixed, especially when the trend isn't clearly bullish or bearish. That's when you kind of do better picking out the most bullish long setups and trading those in long, obviously, and then the most bearish looking setups, trading those on the short side or actionable trades. Remember, a setup is a trade waiting pending. This would have been a setup here after the divergent high, pending a breakdown. There was a trend line break, then it becomes actionable trade, just like it was actionable once we broke it here. It was mentioned as a setup before that. and it's an active trade and offering another objective short entry at this point in time. Okay, this has been Randy Finney with Right Side of the Chart. Have a great day.